everyone. This is John Vance. I'm Jared Ferguson with Vance Wealth, and thanks for joining us for, I guess we're going to call this webinar number 2 for lack of creativity. We're going to be in a position where we committed last week to sharing our thoughts on what's going on in the markets, what's going on with the coronavirus, and provide you our insights. And so thanks for joining us again. We did get some really good feedback, so I hope you find these to be valuable. One of the things that we did request ahead of time was some questions, and so we actually didn't get any, but we have a lot of people participating. So hopefully one of the things that might come out of this, because we do think we're going to do this again next Tuesday, is provide some questions. We have been having quite a few conversations with our clients over these past, obviously, few weeks. And so we've been getting a lot of individual questions. So we'll try to address some of that. But we also just want to kind of provide an update on what's going on in the markets, because it's been pretty chaotic. And so I'm going to jump through some slides and we're going to do this. We're hoping to do these in about 20 minutes because, again, we think we're going to need to do this for probably the next 4 to 6 weeks as things unfold, as we get some greater clarity around what's happening in the markets. And so let's see if I can advance here. Okay. So we're trying to get a little bit better with technology. So bear with us. I think since this is number 2, we're going to get better as we go. Hopefully you can hear us okay. We do have functionality turned off today so that we can't raise hands. I think you have, oh, I have this. I'm going to put Jared in charge here of housekeeping items.
So everyone's on mute. You don't have the ability to unmute yourselves. If you share your screen, all participants will be able to see you. So that doesn't bother us, but just so you know, we're recording this webinar, so we'll send it out by the end of this week. We'll send a link, which I know a lot of you actually were able to view what was recorded last Tuesday. I know a lot of you have already updated your name, but if you guys want to actually change your screen name by clicking the Participants tab at the bottom of your screen and then select Rename next to your name. So if your name's already there, no need to change. It just helps us actually know who's on the call so we know who to reach out to if needed. And if you're using your phone to listen to the webinar, please email our office to confirm you are in attendance.
All right, and please keep your comments and feedback provided after today's webinar, and give us your feedback. Let us know what you need more of and really just how we can help. So I feel like I keep looking at the screen and we need to look up at the camera. Yeah. So we're going to try to get better at this. And so
all of our meetings are, as you know, we sent out an email this past week that all of our meetings are actually going to be held via Zoom. So in accordance with the CDC health precautions and the president, our governor, and kind of per their recommendations, we still want to hold the meetings, but we're just trying to limit the face-to-face contact. Obviously, our clients' health and well-being is first and foremost, but we know that it's a challenging time that we need to make sure that we're here for our clients. So we want to make sure we still hold the meetings, but for now, we're going to do them via Zoom. So hopefully the clients that have been able to participate aren't having any issues, and we'll just kind of play things by ear.
Yeah, and you can tell Jared and I are already violating like the rule of like 6 feet. So I think it would be kind of hard for us to do our talk today if we were far apart. So, but we've been everyone's trying to stay safe and healthy here. We do have a couple team members that are working from home. They feel fine, but they just thought it was best to work from home. So one of the good things about how our office is set up is we all have laptops. We all have the ability to answer our office phones remotely. So we're going to be here fully available to answer questions. And one of the things that I would encourage you now, there's a lot of stuff that's going on. The webinar is really designed to give you hopefully some peace of mind and some actionable items that we're going to discuss today. But we're here to talk. So if you have things that are on your mind and you want to dig a little bit deeper, if there's things you're concerned about, this is truly the time when you need us. We're going to share that we do try to prepare for this stuff ahead of time, meaning that's why we do asset allocation. That's why we diversify accounts. But if you're feeling more anxiety and you want to just spend some time with myself or Jared or Tyler, just know we are here. We're trying to do our best to get back to everyone as quickly as we can. But the office has actually been fairly calm. It's people aren't panicking, but we're all concerned. And so again, we just want to show face to face, knowing that we're monitoring accounts, we're doing the best we can to kind of get through this tough time. And, a lot has changed just in this last week. Jared and I have been talking, with the whole office, and this has been a long week. It seems like we had our first webinar like a month ago. Like these last 7 days, I think took a toll on a lot of people because every day new information was changing, and it was pretty dramatic. So let's just talk about really what's happened in the last week. So a big thing that happened over the weekend was the Federal Reserve slashed interest rates to near zero. And we're going to go through each of these. We have some slides to describe each of these. The fiscal and monetary stimulus is on its way. So the government, Senate, the House, President Trump, they're trying to do what they can to provide stimulus to curb the effects of basically us having to be isolated. So it's on its way. I'll share just some of the new things that happened today. And we know this is going to change every day. The unfortunate part with all of this fear and all of the panic selling is the stock market is down 30% from its highs. And those highs were basically experienced about 4 weeks ago. And then clearly the coronavirus is leading to like social distancing, remote working, and increased health precautions. And it's just kind of changing the way we're doing things. And I think the troubling thing for us is we don't know if this is going to be 3 weeks, if it's going to be 6 weeks, if it's going to be 9 weeks. Again, the good news is we are going to be prepared to work and make sure, being in the service industry, we can be available through technology and remotely. So just let us know how we can help. All right, so this first slide here just talks about the Fed slashing interest rates. Now, many of you probably don't even know who the gentleman is. It's Chairman Powell, the head of the Federal Reserve. And if you look on here, I just wanted to share a couple things, because when we hear the interest rates are cut to zero, that doesn't mean they're giving away free money. That would be nice. Everybody could just sign up to borrow money for their car, borrow money for student loans, borrow money for their house at 0%. It's not really that way. Jared's going to share a little bit on mortgage rates, but if you see up there, treasury rates, those are basically rates for bonds that you can buy and invest your money. So you can see the 10-year is at just over 1%. The 30-year treasury is 1.7%. So pretty low interest rates, not very attractive from an investment perspective. And then the prime rate of interest, which is the interest rate that a lot of lending basically starts at, in terms of if you have a home equity line of credit, if you're doing any bank financing, prime rate tends to be where they're starting from. And so the good news with the prime rate coming down is now it's a lot more attractive. People's home equity lines are going to come down. It's just basically making the cost of borrowing go significantly down to kind of ease some of the pain in the economy right now.
Yeah, so on the mortgage rates, unfortunately, it doesn't mean that you can borrow at 0%, which obviously would be great. I know we sent out an email last week saying it might be time to consider refinancing because rates had come down. I know we actually sent the email to a few lenders that we work with, and they came back saying, actually, that was the week before that rates were really low. They've actually jumped up just because the demand was so crazy that they're actually pricing out new customers, I guess, to refinance. So I was actually able to refi probably 3 weeks ago and close the 30-year fix at 3.5. So, it's going to be somewhere in that ballpark. I think everyone's situation is a little bit different, but if you have something that's 4.5, 4.75 in the 5% range, I mean, definitely consider refinancing. And depending on the lender that you work with, they're going to explain your options in detail and give you different loan structures that might make sense for your financial situation. So obviously, not every rate's the same. I mean, we're seeing these rates jump day to day, and the lenders are saying that as well. And just actually, John had updated these U.S. Treasury rates earlier today, and we actually had to, by the end of the market close, we had to update the rates already. I mean, they had already moved just in one day. I know when we did the webinar last week, the 10-year had crossed below 1% for the first time in history. I think it was around 70 basis points, so 0.70%.
Yeah. And even the 30-year actually temporarily got below 1%. So there's been a lot of volatility. And the one thing too, just based on what Jared said, we can't give you recommendations to say you should refinance or you shouldn't. Obviously, we can help you decide how that fits into your overall financial plan, but reach out to a banker, a mortgage broker, and they can assist you with that decision. But it's worth exploring. It's worth looking into.
Yeah.
Because obviously, if you can save money, put more money in your pocket, that'll help either build up your savings or put you in a better financial position once this the sell-off and once the economic recovery begins. So this slide entitled "Stimulus is on the way." This is changing literally day by day. I have some bullet points here, but frankly, a lot of the changes that we're seeing, we don't even know about. So let's just go. I'm going to go through some of the high level ones, and I'll try to break that down. And what I can tell you is we'll probably have a lot more information tomorrow. We'll probably have a lot more information by Friday. Certainly, we'll have a lot more information by next Tuesday. But number one, there's already been a plan in place. Again, I don't know if it's passed. So that's the hard thing is I see a bunch of headlines, but I can't figure out if they've been passed or if if the president is just saying this is what we're doing. Some things have to go through the Senate and House, and so when I share some of this with you, I don't actually know for sure if this is passed today, if it's a proposal and it's going to be passed in the near future. But the first one on here is tax holidays. So deferral of tax payments. They've already announced that with the April 15 tax deadline, that as an individual, if you have tax payments up to $1 million, you can defer that for 90 days. And for businesses, the number's even bigger. So they're basically allowing people to hold off on making their payments. Now, most of you are probably already paid in full, so this may not have much of an impact. There's also looking at doing tax holidays for things like payroll tax, as well as potentially in 2020 not having to withhold as much tax. So that what their government's trying to do right now is allow you as an individual or a business is to hold on to cash. Because of the slowdown in the economy that we're seeing, because we're seeing businesses have to close, they're trying to find a way, how do we put cash in consumers' pockets so they can pay their bills, so they can eat, so they can provide for their family. So all of these steps are kind of emergency things that they're trying to do. So the next one on this list is emergency funding, including paid leave. There's a lot of workers in America that do not have paid leave. If they're on sick time, if they get sick with the coronavirus, or if they need to care for a child, care for a loved one, they don't have paid leave. So they're putting things in place to create emergency funding so that these people, these Americans, have money to pay the bill. So it all comes back to how do we keep money in the system? And you maybe take this one here on some of the aid we're seeing, Jared.
Oh, direct aid to certain industries like airlines. I think Trump had said we are going to back the airlines 100%, and I think they had asked for $50 billion in funding. So, like John said, I think a lot of it right now is more headline. We're not actually sure what's passed and what's been signed off on, but I know that he's going to step in. I think like the financial crisis when the auto companies had financial hardships, the government was essentially there to bail them out. So that might need to happen with the airlines as well. You're seeing airlines essentially stop booking flights. I mean, people are not traveling much right now, but they may get to the point where they actually just close the airports. We're not sure.
Yeah, and a lot of this because it's out of, the shutdown is out of everyone's control. We're the government's taking the viewpoint that we can't allow all these businesses to totally fail and shut down, because if we do that, it's going to have a spiral effect of people losing their job, not paying their bill, and it goes into the spiral effect down. And we're not concerned about that at all. The bottom note on here talks about how providing liquidity, the government's providing liquidity everywhere, and I'll get to that in a second. But the fourth bullet point on here is sending individual checks to all Americans. I think I saw a note Mitt Romney said, hey, every American should get a $1,000 check. Who knows what that's going to be? We could see, a $1,000 check coming every 2 weeks or every month to all Americans. And so there are actually proposals in place to get money out there. Ben Bernanke, who was a previous Fed chair, basically talked about how if you get into a financial crisis, you could just drop cash from a helicopter. I mean, literally, that's one of the things he said is if you had an economy that was struggling enough, you just get cash out there as quickly as you can. So there are proposals in place to get this out to all Americans, which obviously would stem some of the pain, and maybe not even only just the pain, some of the panic. Obviously, when we get into a defensive mode of, am I going to be healthy? Am I going to be able to pay my bills, take care of my family? It starts to create this level of panic, which it is kind of unseen in our nation, because our nation has been pretty stable from an economic perspective.
Well, and we've seen people talk about, I think Trump, the payroll tax cut, but me and John were talking about, it's not really going to help the people that are home from work and not getting a check, right? Maybe their business closes for the foreseeable future and they're not actually getting a paycheck. So something like that is not going to help people that are actually out of work, but something like John said is actually sending checks to people to put money in their pocket to help bridge the gap.
Yeah, so you're already seeing that, and again, we're getting this anecdotal evidence that's coming in that retail shops, restaurants are having to lay off all their servers because they need to get them on unemployment so that they actually can receive some money, and then most of these companies aren't in positions where they can just float that level of cash flow every single week without having revenue come in. So obviously, a lot of stuff's going on. The last one on here is it says SBA. Disaster loans. I have a next slide for that, so I'll be there. I'll be there in 1 second. But the biggest thing at the bottom here, and it's kind of I think to me, it gives me a real sign of hope and faith in our system, is that the government knows at all levels we have to provide liquidity. That's the number one thing. So all of the efforts they're taking is to put cash out there so that we don't have failure of financial institutions, failure of different industries, and so that's happening. And so as much as we can feel really nervous and pessimistic about where we might head for the next 3, 4, 5, 6 weeks, because of this liquidity, it's going to start putting a bottom. It's going to put a bottom in the market. It's going to put a bottom in the economy. Where that is, we don't know, but it does give me some confidence seeing the action that was put in place yesterday and today to provide this liquidity, because at some point the panic will subside and this liquidity will create some really amazing stimulus for the economy as we start to rebound. So a couple quick things. If you are a business owner, or if you know any business owners, and so, you can actually apply for what's called a disaster loan. And the disaster loan, basically, if you have any economic basically damage because of the coronavirus, you can go onto the SBA website, and it's pretty easy to just Google SBA disaster loans. You can go on there and apply as individuals up to $2 million for assistance at a low interest loan. And then some larger businesses can also get more. So, just know that that's there, that's available. So even if you don't think you need it, we don't know how long this is gonna last. So try to get in line for it. Submit the application. You gotta put a lot of financial information in there. But if this lasts a little bit longer than we think and prolongs into the summer, you're gonna really wanna have access to that cash to run your business, because just like at Vance Wealth, we have a team that we work together. We have payroll that we have to make every 2 weeks. We have rent payments. We have all these things. We need to continue to exist. And so if this does get prolonged for again through the summer months, we just want every business like us should be prepared to have that cash available just in case. So this chart just talks a little bit about market returns. It's a little small now that I'm seeing it, but it also just may be from me being a little bit away from the monitor. But the long and short of this just measures the U.S. stock market, a broad basket of U.S. stocks going back to 1926. So it goes back a long time in our history and shows the impact. And these bar charts represent a 10% decline in the market, a 15% decline in the market, a 20% decline in the market. And then we added a little table down at the bottom. I'm going to try to put my mouse over it. A little table down here at the bottom that actually shows the 30% decline. So essentially, in all of these cases, the 1 year, or I should say the average return in these cases were positive on the 1 year, the 3 year, and the 5 year on average, going back almost 100 years. And so this is just meant to show you that we've had sell-offs before in the markets, and the recovery has been pretty consistent. And so we obviously don't know what the future holds, but again, having faith, being a long-term investor, when we have sharp downturns, we tend to get pretty healthy returns following those downturns. And the simple reason is because investments are cheaper. So when you have cheaper investments because of the massive sell-off, it actually allows us to have better returns going forward. Even though we're living through this pain right now, we know this will pass, we just don't know when. So I don't know if you have any more to add on there.
Yeah, no, it's probably more on this next slide, as I think some clients are calling in. Let's see if we can get back there. Some clients are calling in and saying, I still had a trip planned for this year, or maybe something else around the house that you guys were planning on doing, and is now a bad time to take out the money. Well, the reason we set up, and this is just a summary of how we set up the asset allocation for our clients, is having the next 2 years. Now, this cash equivalence includes potentially money that's in the bank, but any fixed income that we have that's shorter term, but also going out for the next 7 years is, what are you guys going to spend the money on? We want to make sure that amount is invested in fixed income to weather the storm. Now, some of that has actually gone slightly negative for this year, but we've seen some of the equities down 20, down 30% over just a 3-week period. So I think when clients are calling in saying is now a bad time to sell, we're selling from your fixed assets. So we're not actually locking in those losses on the equities. And I think that's why we try to do that future planning of the future cash flow, and making sure that we really understand your spending needs, because we don't want to be in a position where we actually have to sell something that's down 20% to get you the money to pay the bills or to buy a new car, et cetera.
Yeah, so I think the big message for us is that for you from us, I should say, if you have near-term cash needs that maybe we were unaware of, or you're being more impacted by businesses having to shut down, let us know, because we do think we're going to see a fair amount of volatility for the next several weeks, and there might be an opportunity as we get bounces in the markets to basically take some money out as necessary for immediate spending needs. But other than that, looking at this chart, hopefully this gives you a little bit of calm, meaning we've planned for 7 years of your potential spending needs. And this might last 7 weeks, it might last 7 months. I don't have really any belief that this could happen. This could last for 7 years. And so we prepared for this ahead of time. That's why we asset allocate your money. That's why we diversify it. So we're happy to explain this a little bit further. We have been getting some more questions like, what are we doing right now? Are we buying? Are we actively buying? So for clients who've been sending money in, we've been kind of tiptoeing back in, or with some fresh cash. We will be doing some rebalancing. I think we're going to talk about that next week. So stay tuned for some more actionable items, because there are tax things that we can do. And so we're going to go into that next week. So I think we're wrapped up. I don't know if you have anything else to add.
Yeah, I think from what I've heard from multiple clients over the last week or two has been, this time it feels different. I think you're right, because not only are we having to deal with the financial piece, we're having to deal with the other side, which is like the health scare side, the schools closing, the restaurants closing. John and myself, we've been working out pretty much every day in the morning before work, and now our gym's closed. And so we're all being forced to essentially create a new routine and do things a little bit differently. So while the finance piece and kind of reminds us of the 2008, we didn't have the health scare side of it that we're having now. And so obviously the health and well-being of our clients and potential clients are first and foremost. Same thing with our team here. But it's all requiring us to do things a little bit differently. Obviously, we haven't been doing these webinars, which I think based off the feedback, things have been good. So we'll start doing these probably maybe more frequently. But also, we talked about this in a staff meeting, is, find a new book, or organize your house. We got a tool called Everplans that takes a little bit of time to get set up, to get your estate in order. Maybe now, since people have more time at home, maybe now's the time to do that. So I think trying to keep things in perspective, obviously family and friends are the most important, trying to reconnect with them probably virtually, but I think that's okay at this point.
Yeah, and then my only message, yes, stay healthy, have good habits. Maybe you're going to catch up on more sleep. We know at times we can be sleep deprived, so just take care of yourself. And if there's anything that we at Vance Wealth can help you with, you're also important to us. And so just know we're here to guide you through this time. We feel like this is the time we really earn our keep with you as clients, is that you trust our decision making, but just know we're here to help. So I guess we're going to sign off now. So thank you so much for your time, and please share feedback. And again, specifically, if you have questions that you want us to address, because of compliance, we actually want to get those pre-approved so that we can share this with the whole group. So again, thank you for your time, and you guys have a great evening.